Meme stocks made their presence known once again in May, triggering comparison to the frenzy in 2021. GameStop shares, GME, surging by 50% in just one day. We examine the social media post that sparked this surge and explore the role of the retail trader in the investment landscape.
All right, roaring kidding, as we've been talking about bringing the meme trade back to Wall Street and beyond. A single post on X sparking a massive rally in GameStop shares, with volume hitting its highest level since 2021. It's not just GameStop, as we've been discussing. Shares of AMC, Tupperware, remember that's a meme stock, BlackBerry, they're all moving sharply higher. Joining us now, Tasty Live founder and CEO Tom Sosnoff to talk more about this. Tom, thanks for being here. Are you having fun today too? As much, I mean, you heard us just talking about it. What kind of activity and chatter are you seeing today?
It's kind of, yeah, of course I'm having fun, but it's all the chatter we're hearing today. I mean, there really isn't much else. So it's been a slow week. I mean, last week was pretty slow. So this week, everybody came in all perked up, and yeah, it's kind of dominating the story time.
Do you see, Tom, is this kind of a broader sign of just risk appetite ramping right now to you? And if so, do you see that kind of playing out in different data points? Do you see that in the options market?
Well, for sure. I think that there was a real lack of new ideas. There was a real lack of there was a lot of complacency in the markets. And like I said, the last 2 weeks were kind of slow, and this rally has been kind of a grind to the upside, and vol's been crashing. So I think that, this move today was really welcomed especially by option traders, but also by kind of everybody, just as another level of excitement. I don't look at this at all like I did in 2021, when it was almost a transformational moment, dragging, tens of millions of people back into the marketplace. That's not what we're seeing today. This is just, this is all the players just kind of transitioning or moving into something that's actually active. This is kind of like the old days on the trading floor when there was a lot of noise in one pit. Everybody would run to that pit. That's what we're seeing today.
Well, Tom, there was another aspect of this whole phenomenon in 2021, which was like the narrative of the little guys trying to stick it to the big guy, right? Trying to stick it to hedge funds. And of course, we know Gabe Plotkin got caught up in that, and there was a big short squeeze. What's fascinating to me today is that there's still a short squeeze. The 24% of the company's float was still shorted going into today. According to S3 Partners, we're looking at $936 million in mark-to-market losses as of earlier today in a single day. Like, it's so interesting to me that there were still that many people shorting this stock kind of quietly in the background.
I don't know. Well, first of all, the float is the float's a lot bigger than it was, 3 years ago. And so that is there's been a couple of splits. There's been, a lot of stock that's been issued. So it's a very different situation. And you also have to remember that those numbers are really misleading, because there are huge index fund positions right now. And on the short side of the index funds, because interest rates have been popping up, there's a lot of short stock out there that is just tied into different index arbitrage positions. And, GameStop's one of the bigger, Russell 2000 stocks. And so you're really talking about a lot of that number is mixed in with just, huge ARB positions, and they don't really necessarily, they're not going after GameStop, for example. They're just shorting the index because it's an ARB play.
And Tom, who's in GameStop right now? Is that retail, institution, both?
Well, I would have to think that there's some institutional and some prop speculators, but I also think today you're seeing, so what happens when you have a move like what you're seeing today is that a lot of the high frequency firms, after they learn their lesson in 2021, they try to get ahead of it. So a lot of the volume is high frequency firms and market making firms that know that there's going to be customers coming in on the buy side. So they're just trying to get in front of it so that they have some inventory to lay out. So I think that's part of it. And that's part of the excitement. That's part of the huge volume. But I would say that this is a lot more retail. And when we say retail now, it's kind of a mix, but retail is very customer. And I would say that today there's been a lot of customer interest, especially like just in our own office. I'm seeing it, people are talking, and a lot of, people that just work here, they're buying some GameStop, they're buying some AMC, they're just toying around with them. It's mostly just kind of, it feels like play money, but I feel like we're seeing more of that than we've seen in a long time.
And what do you think is driving that, Tom?
Oh, it's just, like I said before, it's just there's markets for traders. And, I come from, this has been my world for a long time in the trading world. Traders are just attracted to noise. And what's happening today is that there's an incredible amount of noise after being almost, you could hear a pin drop for the last couple of weeks. Today, all of a sudden, there's this, incredible amount of noise. It's like a stadium that erupts and you want to know who hit the home run. Well, that's kind of what you're seeing today. And it's just a lot of noise and everybody's attracted to the noise. So all of a sudden, you got to get involved. I think it's good. It's good for the industry. It's good for business. It's good for what we do. It's good for what you do. And it's kind of good for everybody in a fun way. I don't know how sustainable it is.
Well, that's what I was going to ask you, Tom, on this thing. Do you expect what we're seeing here in GameStop to continue, or no, you'd expect it to fizzle out pretty fast?
Well, as a hardcore contrarian, I do not think you are going to see, this is not going to be a repeat of 2021 and that whole, that crazy meme stock explosion where GameStop went from, $15 to 500 and back down to, whatever, 100 or something. I don't think you're going to see that. I think this is going to be a much more muted version of what we saw, and maybe 2 or 3 days. But I don't think there's much more than that. I do not think this is 2021 all over again, but I do think there is an incredible amount of speculative capital out there that is just kind of begging for a shot, begging for, just kind of, I don't want to call a lottery ticket, but I do think there's a lot of speculative capital out there that's just looking for a play.
And Tom, finally, just quickly, do you think that regulators are going to be looking at Keith Gill again, with that tweet kind of setting off this huge explosion?
I really don't. I don't. I mean, I know it kind of, no, I just don't think so. I think that, fool me once, I get it, but I don't think that's the same thing now. I don't think this is, at the current levels we're at right now, Julie, I don't think there's any chance there's any regulatory issues at all. I think this is pretty clean fun at this point. I just don't see it beyond that. I don't think it gets to anywhere close to where it was in 2021 when there was, industry-wide issues and Robinhood had those problems, clearing issues and things like that. I do not see that happening at all this time around.
We continue to monitor meme stocks this morning after Roaring Kitty, the person who's seen as the Kickstarter of the meme stock frenzy during COVID, posted online for the first time since 2021. For more on the meme stock rally, we have 2 experts joining to give us their take on GameStop, AMC, and others. Welcoming in Adam Kobasi, the Kobasi letter editor-in-chief, and JJ Kinahan, IG North America CEO. Thank you both so much for being here. I want to start with you, JJ, because I'm curious the legs that you see to the movement that we're seeing here. How long do you anticipate this rally going on for?
Well, it's really interesting, Madison. Through our Tasty Trade brokerage, we didn't really see as much participation yesterday, to be quite honest with you. I think people were a little bit more of, okay, can this actually last? And so today we're seeing a lot more interest in both of those names. And what's interesting is it's not just on the equity side. Today we're seeing a lot more options trading also. So I would expect the options volume to continue to explode, and for a couple of different reasons. Number one, the amount of capital you have to put up, which retail traders are always aware of. Number two, because the stocks are hard to borrow, those who may not believe that this is here to stay, it's very difficult to short the stock. So in order to do that, they're paying a little extra premium, but they are buying puts in order to express that opinion. How long can this last? As they say, these things can always last longer than you think they can. There seems to be momentum behind this trade right now. And the other thing is we're in a little bit of a slow news cycle. We do have some earnings this week in CPI, but nothing that I think is going to continue to make the market crazy. So as we head into Memorial Day, weekend next week, this may last through that as people are looking for something to trade.
Adam, is this comparable to what happened in 2021, and why or why not?
It's starting to feel like it is. I think yesterday, everyone was a bit skeptical if this was going to last or not. Today, it's clearly lasting. And I mean, look, it's interesting because a lot of people were saying, oh, we're going to have less rate cuts, maybe even more rate hikes. That the economy is far worse now than it was a year or two ago. But the reality is equity prices are at all-time highs. Crypto is near all-time highs. And now retail investors have more capital than probably ever before. So, and a lot of this money is either rotating in from the sidelines or moving in from other assets like crypto, stocks, and really anything that has had a hot run over the last year, retail was in it. And I think now the question is, how long can this last? How long can these shorts hold on? And I think a lot of the upside is being catalyzed by short covering. Because we've seen over 3.5 billion in short seller losses this week. And that will probably continue as long as retail can hold on here. So it's definitely getting interesting.
What are the advisors to these hedge funds telling them about GameStop? Because why did they not learn their lesson the last time? Like, just don't short GameStop. Just don't do it. And Adam, I'm sticking with you. I don't know if I said your name at the start of that.
Yeah,
Sorry.
I mean, look, I think it's very hard for anyone to tell you exactly what's going to happen on a day-to-day or hour-by-hour basis with any of these stocks. It's basically a toss-up, and I think what the hedge funds are thinking is, well, if we can nail the top, we can make a lot of money. But the problem is nailing the top is almost impossible to do with accuracy, and I think that's why it's kind of the same cycle again. But maybe the skepticism this time around got more people into that short trade. Now they're starting to cover. You're seeing these huge 100% plus moves. I mean, the pre-market, you saw GameStop go from up 50% to up 130%, back to up 80% in the matter of 20 minutes. I think right now it's from a risk perspective, a lot of these funds are starting to say maybe we should just stay away to both directions.
JJ, how closely should the average investor be watching the moves that we're seeing in meme stocks?
Well, I think, it's interesting, but is it part of most people's portfolio? Probably not. So I think you have to be a little bit careful there. Adam talked about the pre-market moves there. One thing to keep in mind if you are trading in there, whether you trade options or not, using the options market to show you what the market is expecting is really wise, in my opinion. And right now, what the market is telling us through implied volatility is that in GameStop, so you have a stock that's basically trading right around $49 right now. The expected move from now until Friday is $24. So half the stock price to move up or down between now and Friday. And I think when people start doing any type of trading, the first thing you should say is not how much I can make, but how much can I lose? Do you, we all have the stomach. If you buy something and it goes up $24, you're happy as can be. But do you have the stomach if it's going to go down $24? And you can see how fast these moves are happening. So the biggest thing I would say is if you go in and play this stock and it's not one that you normally do, please do it in a very small manner because the movements are happening so very quickly overall. So the other thing, even with AMC, trading about $9.50 right now, that move from now until Friday, you have a implied move of $4.50. Again, these stocks, almost 50% of their price, they're expected to move between now and Friday. That alone should be a letter of caution for anybody interested in that.
Adam, really quickly here, we're still seeing that a lot of the action in the trade for these names is coming from retail investors. For this rally to continue throughout the course of the week, let's say even the month, does it have to hit more of the institutional investor side?
I mean, I think right now, and those are some great statistics that JJ just outlined. I mean, the implied volatility on these stocks is in the hundreds of percents. And the options are trading. That's just a testament to the risk appetite that's present in the market right now, I think, from both institutional and retail investors. And I think that's something we're seeing throughout the entire market, from tech stocks to the S&P to meme stocks. There's just risk appetite everywhere. So it's hard to say really how long this can last with these stocks, but I do think that the impact of meme stocks isn't necessarily one that's going to drive the entire market. I think institutional capital is still focusing on the bigger names. And I think in the background, you have this kind of meme stock situation happening. And look, I think with anything that's very volatile like this, you will see institutional players making trades because volatility is opportunity for traders, and there's definitely a lot of opportunity right now.
Shares of both GameStop and AMC coming under pressure after 2 days of big gains. And joining us now is Kevin Paffrath, financial analyst and YouTuber behind Meet Kevin. Kevin, always good to have you on the show. Let's just start right there. Kevin, we were talking a lot, of course, this week, as a lot of people were, the meme stocks GameStop, AMC, BlackBerry, kind of fizzling out today. But start there, Kevin. What'd you make of the moves we saw there?
Yeah, absolutely. First of all, it's incredible. It feels like we're back at the beginning of 2021, and I'm just waiting for Vlad from Robinhood to start coming out and making announcements again. It's wild. So it's quite entertaining. But one of the things to know is even back in 2021, we had these down days. We're really only on the third day of this momentum rally again. I like to replace the word meme stock with momentum stock. That's really what this is. The more momentum you get, the more they go up. It's not really a fundamental move, right? It's all in volume and how many people are into it. Now, these off days can oftentimes lead to violent new rallies. So we'll see. Usually what people are doing, and I just pulled mine up, is they're just making a list of the highest short interest, and then they're going down that and buying it. That seems to be the only fundamentals that are going into this, and it's really entertaining to watch.
Are you participating in it?
I participated in the there was this company Faraday
Yes.
Futures.
Yep.
And so yesterday I was looking at it going, this is like a tiny little company, and it was up 300%. And usually what happens is the news coverage hits after the market closes, and then it goes up even more the next day. And so today it's up another 150%. I don't think I'm going to play it again for tomorrow, but when I have small little trades on the side that I want to have some entertainment with when it comes to the momentum stocks, that's what I do. But I go in knowing that if I'm going to lose 100% of my money on those, that's okay. In fact, we started this thing in the office where instead of betting each other $20, we make the other person buy a meme stock option. So that way, if it really rallies, it really upsets the person who lost the bet more.
Amazing. And by the way, Faraday Future happens to be the second highest trending ticker on Yahoo Finance. So obviously you are not alone in noticing that one and that it does continue to rally. And there's a whole crop of other sort of meme-ish names that still seem to be going up today, even though, you know, GameStop and AMC are down. When you talk about the sustainability of this, I mean, one other big difference between now and 2021, as we have talked about on the program, is that the volume in these names is much lower. You know, when you talked about how volume has to be there for it to keep going, it's definitely higher than it was, you know, a week ago or 2 weeks ago, but it's much, much lower than it was in 2021. So what does that tell us about whether this can keep going?
Yeah, that's definitely going to put some upside limit on where we can go. What we have to think about for January of 2021 is we came off basically 9 months of the stock market going straight up. And that was, you know, Larry Kudlow, we're going to have a V-shaped recovery. Jerome Powell's running the money printer. They're sending stimulus checks. People are taking their stimulus checks and throwing them into the momentum stocks. Today, wallets are tighter. We haven't seen stimulus in years. You're not going to for a while. Credit card rates are higher. Grocery prices are higher. The dollar menu is now $3 at McDonald's. It's a lot harder to come around extra cash, and less people are playing the stock market than they were after 2020's madness. That's for sure.
Kevin, you know, I'm just interested too to get your take, and granted, you know, asking you to speculate here, but I'm just curious when you think about why people were kind of moving into these names, GameStop, AMC, BlackBerry. What do you think, Kevin, was sort of kind of motivating them? Do you think it was, listen, maybe it's just fun. It's entertainment. You get to play along with Dave Portnoy, or is it, you know, is it greed? Is it anger at, you know, Wall Street and the hedgies? Maybe it's all three, Kevin.
Yeah, I mean, to some extent, it's all of those. The biggest motivation is to make money, right? Everybody wants to go in and buy a 10-cent zero-day option or, you know, a weekly call option and have it turn into $5. And the one time that happens out of 20 trades just kind of keeps everybody coming back because it's sort of like playing the lottery. It's really fun. Of course, the argument that, hey, it's to get the shorts, or, hey, why are they halting the stock? I did a whole video breaking down why they halt the stocks, the limit up, limit down, and that. People don't generally care about the mechanics behind it. They just want to make money. And I don't blame that, because times are tough, and I'm all for it. So, hey, if folks can make money on the momentum, great. Just know once it really consistently bleeds, it does bleed. The good news is, companies like AMC, they're starting to issue shares. A couple days ago, AMC raised $250 million. That covers a quarter of their negative cash flow. So they basically got 3 months of free operating expenses to pay for their employees and their theaters. it's actually really good for the companies and a good opportunity for them to stabilize their balance sheets.
Or at least to buy themselves a little more time in the case of some of these guys, right, Kevin? You're talking about momentum. You're talking about when the momentum turns against you and there's bleeding and it tends to continue. Looking at a chart of Tesla right now, Kevin. Because when you talk about momentum stock, that's a momentum stock right there. Not usually called a meme stock, right? But it has some meme-ish characteristics. How you feeling about Tesla these days?
Boy, Tesla's been a tough one. I think the way I look at it is my rule of thumb this year is patience for 2024, hopefully hope and bullishness for 2025. The reason I say that is we're right in the midst of an election year, and that shouldn't have anything to do with Tesla. But at the same time as you're in an election year, you've got Elon on X. He's got a very sort of one-sided political point of view. He doesn't hide that. That upsets a lot of folks who are usually your EV supporters and climate change supporters. Elon kind of remarks, oh, why would climate change activists attack Giga Berlin in Germany? Well, because of his politics, right? So I'd like to get past not only the election, because then I think we're going to see politics cool a little bit from the Elon point of view, but we'll also have gotten past the shareholder vote. We'll have gotten past the robotaxi event. We'll see how much adoption we actually get for full self-driving, what the adoption rates are, and most importantly, how much cash are they actually going to have at the end of the year? I'm worried that they're going to have to do a pretty large fundraise, and that's why they're cutting 14 to 15% of the staff, firing the entire supercharger team. It feels rash, but I think it's because they have to, running a little low on cash. So hope for 2025, but patience for 2024 is my take.
Kevin, that's really interesting, the idea that Tesla needs to shore up the balance sheet. What do you think is the most likely way they would do that?
Oh, they just issue shares. Not only do they need the share price to stay up so that Elon doesn't get margin called on his loan secured by Tesla shares over at X, but they would just issue shares is my expectation. And the reason for that is, you look at the balance sheet, they've got payables of that well over $20 billion. They've got maybe $3 to $4 billion of free cash available. And what's remarkable is their free cash flow in the first quarter was negative $2.5 billion. Then Elon suggested they would spend $10 billion this year on AI for their FSD. And I'm thinking to myself, where's the money coming from? It's certainly not coming from increasing deliveries. Right. So that's why we're seeing the cuts right now. We're seeing the cuts on employees. We're seeing the cuts on expanding the business. For example, two big things that I really enjoyed about Tesla years ago was the idea that we were going to build custom batteries, the 4680s. Now, those are really just a hedge. That's a word they use. They only use them for the Cybertruck.
Right.
The Dojo software infrastructure they were building out, the server infrastructure, that's a, quote, long shot per Elon Musk. These were things that were really, really great and full of hope a couple of years ago that are now hedges and long shots. And I think, again, it's because they have to. They don't have the money to keep throwing into these. If they did, AI, Elon's AI play, would have hired Tesla to do a server stack build out. Tesla could pay for that if they had the extra cash, and they would get the contract as opposed to Oracle. So I think there's definitely a massive cash problem, and that's why I'm just saying patience this year. But I do love the company, I love the people, I love the cars, and full self-driving is amazing. So it pains me to say that.